What if I told you that a political deal happening behind closed doors in Washington, D.C. could be the very thing that lights the fuse for the next massive crypto rally? It sounds disconnected, I know, but today we're going to connect the dots between a government shutdown and the wild world of digital currency.
Yeah, I know what you're thinking. A budget agreement over here and a Bitcoin price surge over there, they seem like they're in completely different universes. But there's a fascinating hidden connection. So let's dive right in and figure out how these two seemingly separate events are actually tied together. All right, to get to the bottom of this, we first need to introduce the main character in our story. And it's not a person. It's a little known but unbelievably powerful government bank account.
Okay, so this is the Treasury General Account, or TGA. The easiest way to think about it is like the government's main checking account. All the tax money, all the money from issuing bonds, it all gets deposited right here. But here's the kicker. Unlike your checking account, the balance in this one is so enormous that its ups and downs can literally shift the entire financial system. Now get this. During the government shutdown, the balance in this account swelled to a staggering $850 billion. Think about it. The government was still collecting tax revenue, but it wasn't spending money at its usual pace. So all that cash was just sitting there, effectively frozen and pulled completely out of the market. It was like a giant financial black hole. So we have this massive pile of cash just sitting on the sidelines. Let's take a closer look at how this cash hoard became a huge problem for investors and for the markets. This right here is the core of the issue. See, when the TGA's balance goes up, it's literally sucking money out of the private banking system. Every single dollar that goes into that account is a dollar that's not available for banks to lend out, for companies to invest, or for traders to put into the market. It just dries up all the available capital. They call it a liquidity drain. You know, analysts like Arthur Hayes even have a name for this. He calls it stealth quantitative tightening. It's a clever way of saying it has the exact same effect as the Federal Reserve intentionally tightening the money supply. But it happens quietly, behind the scenes, just based on government spending, or in this case, a lack of spending. It's a squeeze on the market that happens without the Fed even lifting a finger. And you could see the impact almost immediately, especially on riskier assets. As all this cash, all this liquidity was being vacuumed out of the market, what happened? Bitcoin, which is super sensitive to these kinds of shifts, took a pretty big hit, a 19% correction from its recent all-time high. The connection is right there. Okay, but here is where the story takes a massive turn. This entire process, this whole liquidity drain we've been talking about, well, it's about to slam into reverse. This chart really lays it out perfectly. It's like night and day. During the shutdown, the TGA swells, liquidity drains, and asset prices tend to fall. But after the shutdown, the government has to start spending all that cash it was hoarding. The TGA balance goes down, a ton of liquidity gets injected back into the market, and historically, that's when asset prices start to climb. And we are not talking about a small amount of money here. Projections show that somewhere between $250 and $350 billion is about to be unleashed from that TGA account right back into the financial system. That is a massive wave of cash that's about to come flooding back into the market. So, a giant wave of cash is poised to hit the market. The big question is, why is this such a big deal for Bitcoin specifically? Why is crypto so uniquely positioned to ride this incoming wave? Well, it really comes down to a perfect storm of factors. First off, Bitcoin just is a very liquidity-sensitive asset. It thrives when there's cash in the system. In fact, its correlation to the dollar liquidity index is around 0.85, which is an incredibly tight connection. Second, when all this cash hits, it tends to weaken the US dollar, and Bitcoin has historically moved in the opposite direction. And finally, if you look at the technicals, indicators like the RSI are suggesting Bitcoin is currently oversold, meaning it's basically coiled and ready for a rebound.
And hey, if you think this is all just a theory, don't worry, we've seen this movie before. Just look at what happened after the last major shutdown ended back in January 2019. A very similar liquidity flood hit the market. And the results? Bitcoin went on an absolutely insane rally, soaring over 265% in just 5 months. The precedent is there, and it's powerful.
So we've seen how this played out in the past. Now, let's bring it to the present. What does this all mean for the market right now? And what are the experts keeping a close eye on? All the signals really seem to be lining up.
First, you've got prediction markets giving it an 85 to 90% chance that the shutdown ends this week. Then you look at on-chain data, and you see the big players, the whales, are buying up Bitcoin and moving it off exchanges, which is a classic bullish sign. And to top it all off, there's growing chatter that the Fed might actually cut rates, which would just pour even more fuel on the fire. So, because of all this, analysts are starting to zero in on some very specific price targets. As you can see here, the first major hurdle is that resistance level around $107,000. If Bitcoin can clear that, the next big test is a massive cluster of liquidity sitting around $112K. And if the momentum is really strong, some are looking at an upper target of $115,000 as a real possibility. So let's just step back for a second. What started as a political debate in Congress could end up creating a multi-billion-dollar opportunity in a decentralized digital asset. It's pretty wild. As this old world of politics and the new world of digital finance get more and more tangled up, it really forces us to ask a bigger question. What does the future of finance actually look like? Something to think about. Thanks for joining me.